The G20 meeting literally just ended a few minutes ago. So thank you very much for joining us. Following the conclusion of the second Finance Ministers and Central Bank Governors meeting under South Africa's presidency. I'd like to welcome members of the media here in the room and also to those that are joining us online. On the panel, we have to my left the Minister of Finance, Enoch Godongwana, and the South African Reserve Bank Governor, Lesetja Kganyago. Also with us, I'm sure he'll be joining us shortly, is Dr. Duncan Pieterse. He's the Director General of the National Treasury, and he's also one of the deputies responsible for the finance track. The Minister has just indicated that he may be busy with other responsibilities. He may join us. My name is Lesetja Kganyago. I'm responsible for communications in the South African Reserve Bank and your moderator today. I should point out, as many of you may know this, that there is no communique. There is also not a statement from the chair. However, we will be releasing a media statement shortly after this briefing. The Minister will share his reflections of today and yesterday's meetings. But before he does that, just a few housekeeping rules. Can I ask that you please make sure that your phone's on silent? And please note that food and drink is not allowed in this venue. If you can, please take it out if you did come in with any. Before I ask the Minister to address you, when we do call on you to pose your questions, can you tell us the media house that you represent, as well as who you are and who your question is directed at? Over to you, Minister. Thank you.
Do I have to press anything? No. Oh, okay. Thanks, Sora, and good afternoon. We've just had the second meeting of the Finance Ministers and Central Bank Governors. Because of the nature of the meeting, were the IMF and World Bank meetings that are taking place at the same time, so had shorter agenda. And the governors are going to tell you about last night. That was his sideshow and his dinner. We opened this morning with discussing the international financial architecture, which focusing, among other things, on the reform, continued agenda of the reform of the multinational development banks. And key item is that work has been done. What we need to do is to develop a reporting mechanism for the banks which we hope to be concluded by the end of September, to what are they doing in line with the roadmap. The issues also continue to deal with the debt vulnerabilities, particularly in emerging economies and the African continent. In this regard, the common framework is an instrument. We will be publishing case studies of countries that have gone through that process. On the focus, another focus agenda was on the African continent. As you would be aware, that given the fact that the presidency now is on the African continent, we've given a spin and a focus on Africa. And then a key of those challenges that need to be done on the African continent, and deepening some of the institutional arrangements we've had, like the Compact with Africa, replenishing the African Development Fund, and generally, how do we deal with the cost of capital and access to capital for the African continent? So those are some of the challenges that we grappled with this morning. Over to you, Governor.
There isn't much to add. Minister, suffice to say that we did reflect on the current economic developments and the extent of the uncertainty that engulfed the financial markets as a result of the trade measures that had been taken with respect to the impact on trade and the response in the form of tariffs and what that actually meant for financial stability. There was a reflection on the benefits from globalization, and members were supporting an open, rules-based and transparent trading system with the World Trade Organizations at its core. There was also a big reflection that the current rules might have to be relooked so that you have a much fairer trade. There was also a reflection on the global imbalances, and that was strongly emphasized, and that we need to look at the root causes and review both the internal and global policies that intensify these imbalances and increased trade barriers and trade tensions that we had seen, and that the IMF should actually be playing a key role in assessing the country-specific policies. There was also a need to take immediate and coordinated efforts as needed to de-escalate and reduce the current volatility and uncertainty, and to provide policy clarity. Basically, uncertainty was seen as a tax without revenue, and that we cannot let the uncertainty become the new certainty. Actions with convictions and agency then became necessary. There was also a very strong view that the global financial system and financial markets have witnessed heightened volatility, but remained resilient, that the core of the global financial system remains resilient with adequate levels of capital and liquidity. Importantly, the regulatory reform agenda that we embarked on in the aftermath of the great financial crisis is bearing fruit and seems to have shielded the global financial system well, and that we must bid these reforms to continue to provide certainty with respect to that regulatory reform agenda. And clearly the economic developments and the economic situation that we are in poses different challenges to different countries. For the countries that have got fiscal space, that the fiscal space would have to be deployed to try and get demand going. But for those countries with no fiscal space, they are going to have to rebuild buffers. There was also a sense that the disinflation process that was embarked on in the aftermath of the great inflation of 2022 is slowing down, and in some respects might actually be reversed, which had led central banks to be cautious. But again, there is huge heterogeneity. There are central banks which are on target or closer to their target. They have got the space to provide monetary accommodation. But there are central banks that are further away from targets where the disinflation process is also being slowed down, and that central banks would need to remain vigilant. And in a sense, those were the reflections on the global economy. As Minister Godongwana said, there isn't a chair statement or a communique, and these are just our takeaways from the discussions that we have had.
Thank you very much, Governor and Minister. I'll take your questions. Can you please indicate right here in the front? A microphone will come to you. Okay, please can you stand? There's a microwave coming your way.
Thank you. Hi, my name is Paul Wallace. I'm with Bloomberg News. I just had a quick question about whether Scott Bessent, the US Treasury Secretary, attended the talks, and if so, what was his contribution?
Thank you. Minister?
He did attend the last night's session, which was talking largely about the issues the governor is referring to. Yes.
Okay.
I mean, he was not largely contrary to what people expect him in contradicting anything that was saying, except was elaborating more on the rationale for what the Trump administration is doing on tariffs, the stuff that you probably know.
Thank you. I'll move. Can I see who else has a question? Right over there. That's right.
Thank you for taking my question. I'm Tsubasa Yamazaki from Kyodo News, Japan. I have a quick question. Given that the Trump administration's tariff hikes are expected to slow down the global economy, could you explain why you did not issue the joint statement and communique?
Okay.
Thank you.
No, we took a conscious decision even before that if we don't issue a communique, the standard practice since Indonesia, after the Russian invasion of Ukraine, you will recall, there's been difficulty in the finance track to issue a communique since then. But the standard practice we've established is that in the absence of a communique, we issue a chairman's statement. In this regard, we took a decision as the presidency that in this particular session, we're not going to issue a chairman's statement. We'll do that in July. It has got nothing to do with
We are working towards a communique in July. We hope that we come out with a communique. Yeah. If it doesn't happen, we might end up with a chairman's statement.
Okay, I've got two hands over there, the one at the back. That's right.
Thank you. My name is Sarah Paez. I'm with Tax Notes. My question is a two-part one, and it's for the finance minister. I was wondering, was there any discussion of the international tax architecture during this meeting, and what was the nature of that discussion? And then also, will the South Africa G20 presidency be focusing at all on international tax negotiations like the ones happening at the UN about the tax framework convention or the OECD? And will the presidency be reviving the taxation of the super rich proposal under the Brazilian G20 presidency? Thank you.
No, in this part, we limited, as I indicated, our agenda was very limited for this specific session, and we didn't go into the detail of the tax arrangements. But as you are aware, via the OECD has been providing technical advice on the, and some of the aspects of those tax agreements have been implemented by a number of countries. There is that process, but the United Nations has developed a second process. We are of the view that these processes must of necessity not compete but be complementary. And as a result, we are making a contribution to the UN process, and we will be part of the discussion in the Finance for Development in Spain.
Thank you. I'll take one in the front.
Thank you. My name is Sandra from Sina Finance of China. I wonder, in the midst of the U.S. tariff and retaliatory measure from other major economies, how has the meeting discussed on how the G20 countries will coordinate to safeguard the global trade, and also how to prevent the excessive volatility in the emerging market? Thank you.
Basically, what you are having is that the negotiations that are taking place bilaterally, and it is very resource intensive. And there was a call that we should restore the multilateral system, and the multilateral system with respect to trade would have the World Trade Organization at the center of those negotiations. And you know, if we go back, we will realize that the last big agreement that was made with respect to trade was the Uruguay round, and it's more than 30 years ago. So since that had happened, a lot of things took place. We now have the internet, you have got digital assets and so forth, and the way in which we are going to have to look at trade would of necessity mean that the rules that you have had in place are going to have to be relooked, and that was the reflection that actually took place.
Thank you. In the center here.
Hello, Daniel Davis, Agence France Presse. Thanks for taking my question. You spoke in your opening remarks about the need to de-escalate trade tensions and reduce the current volatility in the financial markets. I just wonder, could you give us some more insight into the nature of those conversations over the last couple of days, and what were the contributions on this topic from the United States and China specifically? Thank you.
I do not negotiate trade agreements. Ministers do. But basically, the point here was that the tit for tat that takes place means that we might actually not be talking to each other, that we need to actually open the dialogue so that we talk to each other, that we are coming to the point where the tensions have become so elevated that even when a hand is being extended so that one country is reaching out, we might not see that hand because things had become so tense. It's important that those conversations take place. There are time limits that had been set. Some tariffs are supposedly off the table for a period of 90 days. It's ticking every day. The days are becoming fewer. And in an environment where every country is negotiating bilaterally, these things could actually take a lot of time, and meaning that the uncertainty might be with us for long, and that there was a call that says that you have got to actually be de-escalating, and the way to de-escalate is to actually be engaged in dialogue.
That was your session. That's why I'm giving it to you. But let me just add one point. The general principle of rejecting protectionism and commitment to multinational trade system and a rules-based system was broadly the main principle accepted in the meeting.
Thank you. I'll take one more in the room. I've got a few questions online. Please go ahead.
I'm Katie McMahon from Octus. My question is about the G20 and its role as co-chair of the Global Sovereign Debt Roundtable. I want to ask, to what extent is the G20 worried about liquidity crises and solvency crises for low-income countries with high levels of debt? A three-pillar approach has been recommended to help some countries facing liquidity strains. Has any step been taken to implement that framework? And is it still the case that you think that liquidity is more of an issue as compared with solvency?
Yeah. As I indicated, that key among the things we're dealing with is debt sustainability. And critical in that discussion is that a number of countries not only face that, some of them are facing balance of payment problem. I don't know whether IMF gave us a figure. So the issue is, how do we improve the current common framework to deal with that question? So it is a challenge. That's why people were raising that a key principle is what we must discuss. How do we make sure that these countries have got access to affordable and concessional capital, and therefore deal with the challenge of the cost of capital and how these people access the cost at which they access that capital. So broadly, there's agreement, and we've therefore developed a framework to the extent of saying what lessons can we draw from the case studies that are going to be published of those countries that have gone through the common framework.
Thank you. I've got a question online from Hilary Joffe from the Business Day. Her question is to the Governor. The Governor suggested this week that the G20 processes needed to be streamlined and a focus on fewer priorities. There was also a suggestion to separate the finance and the Sherpa tracks and possibly establish a permanent secretariat. is there any traction with the proposals that you've put forward? What reforms to G20 processes have been discussed in the meeting, if at all? There is another question. Which is,
South Africa made a very conscious decision that with respect to the finance track, we are not going to add new items. And the reason was very simple. What happens with the G20 is that every presidency adds an item. There isn't a mechanism to subtract or where we would say this is now bedded and we must actually have it behind us. And one of the things that had been coming through the conversation was that we launched the regulatory reform agenda in the aftermath of the great financial crisis. And that regulatory reform agenda, at the heart of it, was Basel III. And that as we were implementing Basel III, there were refinements that were taking place, and that we need to finalize the implementation so that we give certainty to the regulated sector, something that in this country is called the Basel III endgame, so that we know we have done that. And the reforms that have so far been implemented have proved to have been very, very relevant because the financial system is much more resilient than it was before the global financial crisis. The G20 started, the genesis of the G20 was with the finance track. And what had happened had been now, the G20 includes lots of other tracks. The problem that you have is that the other tracks end up either finding themselves in the finance track, or some of the finance tracks end up being discussed elsewhere. And that becomes a problem, and we needed to streamline. So Minister Godongwana here was referring earlier on to things that prevented the finance track from having a communique. And the reason was not very difficult to find. Things that are supposed to be discussed at the Shepherd track ended up coming into the finance minister's track, and that clouds the discussions that the finance track actually has. So this year, for the South African presidency, in the finance track, for example, we said we will have a focus with respect to cross-border payments. And we picked up cross-border payments for a reason. And it was because the cost of remittances in the African continent had proved to be higher than many corridors elsewhere in the world. But importantly was that there was political commitment to bringing down the cost of cross-border payments, because under the Saudi presidency, that was adopted at the Leaders' Summit. And we decided that is what we are going to focus on, and we are going to finalize that. In the process, though, the Shepherd's track was discussing the issue of the cost of capital, for which the finance track said this belongs with the finance track, and that is how it got translated into the finance track, and that is what the minister was actually referring to. So we've streamlined the agenda. We didn't add anything from the finance track because we were very clear we needed to finalize what is actually on the G20's agenda.
Thank you. I have one last question also from Hilary Jaffe from the Business Day. Can you tell us more about the high-level panel on Africa chaired by Trevor Manuel, what proposal it has offered for the G20 finance track?
He's sitting at the back trying to, probably following me that I'm not misrepresenting him.
Can you just... Minister, I think please go ahead.
Yeah, do you want to take it, Trevor? Yeah, he must take it.
The chair of the panel.
The chair of the panel, he must himself tell us what he's doing.
Can I ask you to stand, please?
Thank you very much. I was minding my own business, and Minister Godongwana thought that I should chair the panel in Africa. We have 24 panelists drawn from primarily across the African continent, 21 from across the African continent, from the 4 language groups, Anglophone, Francophone, Lusophone, and Arabic, so that we can produce a product that feels African, not exclusively because some of the panelists are from outside of the continent. The terms of reference are clear. The big challenge that confronts us is that we must have a product that we can hand to heads of state at the end of August. We must complete our work by the end of August. And so we've developed a chairperson's framework to which panelists are now contributing. It's a fairly rich process of work running. I'm pretty sure that we will have a reasonable product, not a complete product, but a reasonable product by the time that we have to hand it over to heads of state via the G20 formal process at a ministerial level. And there is a sense amongst panelists who met last night that if the work, it's unlikely that the work will be concluded. We will then continue, perhaps under the guise of UNECA, to ensure that some of those strands of work are carried forward and Africa can own the process of its policy direction. Many of the issues that were raised by the governor and yourself, Minister, are included in the process, and we'd also probably take forward the World Bank theme on jobs as a fundamentally important issue going forward. Thank you.
Thank you very much. Okay. We do have time for one more question, Minister. Okay, please go ahead.
Thank you very much. Camille Shikoya from the Africa Bazaar magazine, and I'm sorry I'm late. I was attending another event. My question to you is, as we know in Africa, the informal sector is a big sector. And oftentimes when we count the GDP, that sector is left out. So given that this is the first time that the G20, which is the 20 biggest economic in the world, is being hosted in Africa, what are you doing to bring this sector as the finance minister and central bank governor to make sure the informal sector are now brought into the regular sector? Thank you.
Thank you.
I think we've got we've got no specific sectoral focus on informal sector. However, there are different expertise which could help us formulate a proposition in this regard. I don't know whether anybody is giving the expert panel some contribution so that they could put that into as part of the contribution. To me, that would be useful. We know the extent of the problem. For instance, the ILO said today in the meeting, that's why I'm saying we're drawing it from a number of people. The ILO made the point that, I don't know how accurate that information is, that about 84% of employment on the African continent is from that sector. So clearly the ILO will contribute inside, and there's a panel of experts but as I indicated, we don't have a sectoral focus on that issue, but I think it's an important point we need to be taking into account. I mean, in South Africa, some of my colleagues in Treasury were saying we complain about unemployment, but if you look at the formal employment, as a percentage of the labor force, we're almost the same side as other countries. Our problem is the informal sector, which we've not captured properly. So I agree with you, it's a matter that needs attention.
Thank you very much. That concludes our press conference. Thank you very much for joining us. And that's it. Thank you.